Hey YouTube family, hopefully you're having an awesome day today. And if you clicked on it because of the title of the video, we are going to be talking about Skillz, the company that's supposedly going to disrupt esports and in fact is already disrupting this space as we speak. And we'll get into all the fun stuff about this company and even why I personally hold this company at such a high standard. After looking into this company, it was a no-brainer for me to invest my hard-earned money into this stock. And I'll talk about exactly why and what its potential could be. And if it's your first time hearing about the stock, don't worry, because we're going to talk about everything from the beginning phases of the stock all the way to the nitty and gritty of everything you might need to know if you wanted to invest. And if there's something that I possibly missed in the video, or maybe some questions that you might want to ask, feel free to leave them down in the comment section below. And if you want to go down there now and leave me another company that you'd like me to look into, that you possibly like and maybe like to do analysis on, and maybe have questions about, let me know. I'm always more than happy to talk stocks down in the comments. And if you want to go check out any of the cool links that I have in the description, click show more and it'll show you all the links. You can get free stocks. There's a bunch of books in there. There's even the merch store if you want to go check that out. But without further ado, let's talk about Skillz, the company that's disrupting esports. Let's go. All right, welcome back. Let's talk about Skillz. If you are interested in video games or have been playing video games at all in your life, I think you're going to really like this company. And maybe even if you don't play video games, I think you'll be able to see and understand why this company has a lot of potential. Obviously, if you know about Skillz, then the first slide isn't really going to bring you a lot of value, but the rest of this video is going to bring you a ton of value. So stay tuned, and I'll show you guys a video closer to the end of the video about what this company is all about. It's like 2 minutes, and I think it's going to give you a lot of insight. So what is Skillz? Skillz is the leading mobile games platform that connects players in fair, fun, and meaningful competition. I almost said meaningless. No, meaningful competition. The Skillz platform helps developers build multi-million-dollar franchises by enabling social competition in their games. So obviously, developers can also use this. So it could be considered open source development, which is really cool to see. Skillz hosts billions of casual esports tournaments for millions of mobile players worldwide and distributes millions in prizes each month. So if you believe that gamers on either YouTube or Twitch or really any of those streaming platforms have a future and that space is going to grow, right? And you are invested into that space, then Skillz is a very, very complementary investment, because not only does it benefit developers, but it also benefits streamers that might want to play with their community or even host competitions for certain prize giveaways for their community. So very interesting product. And the fact that Skillz is the first publicly traded mobile esports platform makes it just something that will never be forgotten. Even if in 10 years it turns into like the MSN of gaming, it's still gonna have a lot of room to grow in between all that. So I think in the short term, it has a lot of room. In the midterm, it has a lot of room. Obviously, in the long term, it has a lot of room to grow. But even at the end of it all, even if a lot of other companies come in and start competing and maybe outbeat Skillz, this company still will have some shareholder value. And with how young you might be investing into this company, we'll get into that in a minute, you're going to be really well off. Again, not financial advice, but this is just something that I can see happening if they are able to compete, not only compete, but also execute on their long-term missions. And so obviously you might have heard of some of these games if you guys have been advertised like on Snapchat, Instagram, Blackout Bingo, Solitaire Cube, obviously Billiards here, which is called Pool Payday, Domino's Gold, and we can scroll through these 2-minute football, Strike, all these other games that exist on both Apple and Android. They have over 30 million players. Let me scroll over here, 30 million players, 20,000 plus game developers, insane. And then 3.5 million daily tournaments and over 60 million in monthly prizes. Obviously, this doesn't come from Skillz, right? This 60 million in monthly prizes isn't Skillz just giving away their money. Otherwise, it'd be a terrible platform. If anything, they're just advertising this to developers and users. But at the end of the day, streamers or just users of the platform can host these and give away pool prizes to their following or to their friends, family, whatever. And this just makes it a more fun way to play. Honestly, it's like combining gambling, which is not really gambling, into the video game sector, which I think has a lot of potential. And so do a lot of people, including Kathy Wood at ARK Invest. ARK Invest adds shares of Open Door Technologies, Palantir Technologies, and Skillz. And I've actually done a video on Palantir. If you guys want to go check that out, if you haven't already, I'll link it down in the description. Watch it after this video if you're interested. But they did just add Skillz to their overall portfolio. And that means they believe in this stock long term. ARK doesn't just invest in the short term. They typically buy things, especially in their innovation or generation funds, they buy things for a very long time. They're not planning to sell this anytime soon. That's a really good sign. Next, we have the stock price. Look at this. Look at this crazy run up that they had. So they went from 13, I mean, really, they went from all the way back here, $10 per share, but they kind of hovered in this 10, 12, 13, 14 bucks per share range for quite some time, right? For a few months. And in November, they had this crazy rally into December, into January, and all the way into February to peak out at over $43 per share. Crazy. And then they came tumbling down like a roller coaster, straight down 57, almost 60% to today's lows of $18. Insane. $18 per share for this company right now, right? That's a really big, like if you were to buy now and it goes back just to 43, you can consider it like almost a 3x on your investment. Crazy. And this doesn't really paint the entire picture. Like you can't just base off of like what ifs. Let's talk about the actual stock. So I'm going to go over here onto one of my favorite platforms, which is Simply Wall Street. If you haven't been here before, go check it out. On the free plan, you get like 5 companies that you can view. I'm not sponsored by them or anything. This is just a platform I like to use. You can go check them out for free. Honestly, I wouldn't pay for their platform. You're not going to use it that much, but it is a nice tool to have in your tool belt if you're ever like exploring companies. Just good one to look into. So right now, this stock is trading at 59% below their estimated fair value. And in addition, the revenue is forecast to grow 27% per year. And when you look backwards, the revenue grew by 91% over the past year. Holy smokers, it ain't no jokers. So their valuation is the next thing I want to look at, because just to give you guys a visual here, they're trading at 1860, and their fair value from an analytics perspective is around $45 per share. So yeah, they're 59% undervalued right now. Absolutely insane. But people are like, oh, I don't know, maybe they're just, they're undervalued for a reason. No, they are growing exceptionally fast. They're advertising insane. So they are burning money, and we'll get into that in a minute, but they have the money to burn. So next we have the future growth, 59%. They took a big dip here, but they're back on track. Their revenue was at $230 million per year, and their earnings was negative $122 million. They're burning cash. They have to grow, right? That's what all growth companies are about. Without that cash burn, they wouldn't be growing at 59, 60%. When you get into these numbers, they're probably not going to be growing at that same rate. Maybe 50, maybe 40, but they're not going to be growing at the same rate unless they're able to do something huge. And as you can see here, December 30th, 2023 to December 30th, 2024, somewhere in the middle here, they're going to start to become more and more profitable. And analysts are expecting that between 2024 and 2025, that will be their first fully profitable year. If they're able to do that sooner, great. If not, analysts are already expecting this. So when you're looking at the long term, if they're able to beat that out, the stock price is going to go skyrocket. If they're able to match that, the stock price should go to about average where it should be, right? And if they're not able to do any of those things and they actually go below where analysts expect them to be, well, their stock price probably will be undervalued for quite some time. Or in fact, maybe it will go even more undervalued, which doesn't necessarily paint the worst picture if you're investing in the very long term. But hopefully they don't do that. The goal is that they stay on track at the very least, and if they can, grow even more. So next, let's talk about their debt and their income statement and all that. So their balance sheet here shows that they have zero debt. This is a great sign because they are in the growth process. Meanwhile, having a bunch of cash, around $260 million in cash, $235 in equities, 25 in other liabilities, 22 in accounts payable, and then they have, a little bit of physical assets and other long-term assets, 14 million. Nothing crazy, but they could survive for quite some time with decreasing revenues and burning more cash, right? And that's the thing with these type of companies that are growing exceptionally fast, that aren't cash flow positive yet, they need to have a lot of cash on hand. This is what this shows. And in fact, they also don't want to have a lot of debt. This is good. This is what they show, right? No debt, in fact. So this is just something that you want to pay attention to in the long term. If you are investing long term, make sure you're looking at these balance sheet statements for companies, because if you know the numbers and you see a lot of red, like maybe a company that you want to invest into, half of this is red and they're burning cash and their revenues are declining and you're paying attention to all this, then you will know to probably either get your money out if you invested, or to hopefully double down, or you'll just have a better strategy, right? You'll just have a better strategy. And obviously with a company like that, I wouldn't personally invest my own money in a company that's burning cash. In addition, revenues are declining, the growth is declining, management's selling out. This is just red flag after red flag. You don't want to be investing in that type of company. But when a company is debt-free and had no debt even 5 years ago, it's a really good sign. And even if they start to build up some debt, that's not necessarily bad. I'm just saying if it's really heavy and at the same time as other things are going down, revenue's going down, net income is going crazy down, and, management selling their shares, those are things to pay attention to. And that's why we're going to look at ownership. And this company did have a little bit of selling, right? When I looked at this, I was like, oh, look, insider trading volume makes sense. They just came out of the market. Part of the reason why they dropped in stock price is because investors can actually sell their shares now. So the company's CEO, CFO, CTO, CMO, all these guys that have had shares for a long, long time, they finally have liquidity. And it makes sense for them to want to sell some shares. This guy, in fact, sold about $250 million worth of shares. Insane. This is very, very recent. In fact, it's so recent that this actually could have caused the price drop that we saw with how much money it actually was. And as you can see here, just on March 21st, we had a lot of sales. These are individual sales, and one company also selling out of some of their positions as well. Taking profits probably because they were probably early investors, but no matter what it was, the biggest one that you want to pay attention to that made the biggest dent was right here. Andrew Paradise. Who is Andrew Paradise and why does he matter? Well, Andrew Paradise is the biggest shareholder of this stock. In fact, he owns 35% of the company and another 137 million shares, which equates to around $2.6 billion worth. And those shares are up 70% just since this company went public. So, of course, looking at that, he's going to be like, well, my shares went up a lot. Maybe I need to buy a new house in the Hamptons, kind of match my lifestyle. Now that I'm a billionaire, right, on paper, he wanted to take some money out, and he ended up taking $250 million out. And maybe he wants to invest that money. Who knows? Who knows what these people want to do? But what's important to look at is, hey, this guy owns a lot of shares. Don't be surprised if he sells another $250 million. Don't be surprised if he sells another $1 billion, because this guy has been invested for quite a long time. He's the current CEO, he's a co-founder, and he got these shares for pretty much nothing. Just hard labor, maybe some initial investment, but overall, he holds the most amount of shares, and it seems like he has the potential to sell more, still at a crazy profit. So don't be scared to see the share prices fall because of Andrew Paradise, right? So for me, it's not a super big worry. It's not something that's going to scare me to see him sell another 1, even 5% of his portfolio. Honestly, the thing that would worry me is if he sold half of his equity and then on top of that, he went and, stepped down from the company. That would give me a little bit of like, oh, I don't know. Maybe he knows something we don't. Maybe he sees something we don't see because he's on the inside of the company, right? But this is just something that's normal. I wouldn't be too worried about it. But let's move on to valuation, and then I'll show you guys the video. So valuation wise, let me pull this down for you so you guys can see this a little bit better. So as you guys can see here, here's the share price for Skillz. Honestly, I feel comfortable buying these price ranges because it's already on a discount. But where could I see this price go in the short term? Well, of course, it could go down to here, right? If you look here, it could go down 13, 14 bucks. It could go down to 15 as well. So would I be dollar cost averaging? Yes. But if I wanted to buy for the long term, I would be doing heavier chunks of dollar cost averaging starting literally today. So if you're looking to enter this company, if you haven't already, personally, what I would do for myself, not financial advice. But if you like this company, let me know down in the comment section below what you think of this company so far. I'd be curious to know what your guys' thoughts are. But so far, it looks good. As far as the business model goes, their business model looks really, really good. You know, they're leveraging its patent technology. Skillz hosts billions of casual esports tournaments for millions of mobile players around worldwide and distributes millions in cash prizes each month. So pretty much, they have this patent product. They're the first ones to the market. They're advertising to players, they're advertising to developers. They're also spending a lot of money advertising to probably like Twitch streamers, people like that, where they're gonna host their own events on this platform. And the more money that they rack in, the more fees they can charge, the more they can talk themselves up, the higher the seed rounds they can do. And then what they can do is leverage all that into the biggest platform for esports gambling that we've ever seen before. For me personally, right, getting in on the ground floor, or essentially what seems like the ground floor, on something that is very, very enticing. I mean, we're talking about a company that its current market cap is 7 billion. Right? And the esports space alone is going to be huge, well above $7 billion, well above $100 billion, and well above even possibly $1 trillion in the near future. Again, we are so young into this space, and it's been so unexplored so far that we don't really know what the potential is. So it's hard to just be like $1 trillion or 2 trillion or 10 trillion. You don't really know. I don't really know. Analysts don't even really know what the space could grow into. The only real company that might know is probably Google, and they're not going to tell you, right? Because they're heavily invested in YouTube gaming. There's a reason why Twitch just got bought up. There's a reason why Microsoft is eyeing Discord. All the pieces are slowly being put together because the competition is fierce and the reward is even greater. So hopefully you guys found value in this video. If you did, don't forget to smash the like button. Before I let you guys go, let's watch the video here about Skillz. And after that, make sure you subscribe if you haven't already. Leave me something down in the comment section below. Go check out the links that I have below. And without further ado, I'll see you guys in the next one. Enjoy the video. Bye.
What do you imagine when you think of sports? Players in heated competition, stadiums full of cheering fans, cameras and reporters on the sidelines to broadcast for the people at home, right? I bet you didn't imagine anything involving video games. Did you know that esports are a multi-billion-dollar industry that's surpassing the popularity of traditional sports like basketball, football, and baseball? But just like in traditional sports, only the top 1% of gamers are good enough to compete professionally and get recognized for their talent. What about the 99% who play games every single day but will never get to earn the prizes and fame of the pros? The 99% who are desperate for more exciting gaming content to watch and follow. That's where Skillz comes in. Operation Esports for everyone. By bringing multiplayer competitions with prizes to mobile, Skillz lets anyone become a pro esports athlete. How does it work? It's simple, really. Any developer can download our free SDK and set up their tournaments on the Skillz tournament management system to transform their mobile game into a competitive esport, so that anyone with a phone can compete for prizes and recognition in head-to-head matches, bracketed tournaments, or 50,000 player live events. Plus, any streamer can broadcast live prize-skilled tournaments with our dynamic tournament overlay to engage a massive audience of fans who can watch and join in on the competition. Over 8,000 studios have partnered with Skillz to build and manage their mobile esports, which are enjoyed by 15 million registered Skillz players. Each day, these players compete in 1 million tournaments a day, boosting engagement and revenue for developers. Streamers run Skillz tournaments in their channels and receive payment per engagement, and their viewers stick around nearly twice as long as they did before. All facets of the sports ecosystem, the game, the players, the broadcasters, and the fans are covered by the Skillz mobile esports platform. Skillz is transforming the way the world thinks about sports. With Skillz, the future of sports is electronic. The future of sports is mobile. The future of sports is now. Ready to level up your game?